And the idea behind Hypar is if you have, a lot of your functions, equations, your equipment, all of that stuff is built into Hypar, you can very easily, move things around. And because all the calculations are there, you can recalculate and basically regenerate your building pretty quickly. So Hypar is in the mission of auto-generating buildings.
Welcome to the BIM Heroes Podcast. Today we'll be discussing the state of venture capital in the AEC industry. Welcome, Alice. Would you introduce yourself and discuss a little bit about your background?
Hey, Cody. Thanks for having me on. Love the name of the podcast, by the way. I spent quite a bit of time in the world of BIM and VDC in my past life before joining Brick Mortar Ventures. So I started my career actually in the construction industry with DPR Construction. So I worked for them here in the San Francisco Bay Area as well as in Singapore, mostly on hospitals and data center jobs. And during my first internship with DPR, I was actually helping out with a lot of BIM coordination and was kind of coined, the BIM turn. So that was like my first entry into the industry of construction, got thrown into the deep end a lot on the technology side, helped run a lot of coordination meetings, spent a lot of time in Navisworks, and really loved the idea of building something virtually before building it physically. And then of course I got to see, a hospital getting built outside in the field. So that made me fall in love with construction. So I joined DPR full-time after doing a couple of internships. During my time in industry, my background was always in operations. So I was out on site managing work, but I always still kind of loved that technology side. So early on in my career, the innovation group at DPR was very supportive in, I would say like BIM and the project engineers and people out on site, a lot of the younger folks to go try out new technology. They were very supportive in helping you with piloting. So during my time in construction, I spent a lot of time working with the construction technology startups that were just coming out of the Bay Area at the time. So these were the likes of PlanGrid, looked at FieldWire. So spent time kind of looking at different technologies, trying to find ones that were relevant to my workflows as well as the workflows of my teammates. Spent a lot of time trying to bring the model into the field, ultimately ended up relocating to Singapore to help open up the Southeast Asia headquarters for DPR, where I did a number of different roles from, researching HR practices, figuring out how to help hire people, spent a lot of time working on proposals, and was also the client-side BIM manager for a data center project. So got to see how construction was done outside of the US, as well as, different economic drivers for technology adoption in places around the world where labor is very inexpensive. So it's just interesting to see, some of the decision making and all of that. Relocated back to the US in 2018 and, started getting back into the construction tech ecosystem. For some reason, I thought, working overseas for 2.5 years and coming back, there would be drastic technological changes in the construction industry, but that, change doesn't happen that quickly. So my mind was kind of blown that, the last project that I worked on was less innovative than the first job that I ever worked on. And, got to a point in my career where I had a little bit of an existential crisis and was like, maybe I should go work on the technology side to help build a lot of the processes that I had worked on, developed in the construction industry into technology to help kind of scale that process across the industry. And that's actually how I met the Brick Mortar team. One of the partners here, Curtis Rogers, he was at McKinsey when I was at DPR, and a long time ago, there was a fairly small construction tech ecosystem. This was around the same time when Curtis founded Society for Construction Solutions too. So I knew that Curtis was working with and talking to a lot of startups. He was connected with basically all of them on LinkedIn if you just Googled, construction tech startup. So I reached out to Curtis, curious about what new technologies were out there, were any of those startups looking to bring anyone on? And a little bit out of nowhere, I got an opportunity to join the brick and mortar team. So been with the brick and mortar team for 4.5 years now. And what we do is investing in early stage construction technology startups. So we're a venture capital firm, capital allocator. So we raise capital from what we call LPs, limited partners. And actually all of our limited partners are from the construction value chain. So they include large companies, as well as families that are related to the construction industry. And we take that capital and we invest it in startups that are in the seed and Series A stages. So these are usually startups that are under 30 people. It's not a kind of fast rule, but fairly small size companies that are still kind of in those early stages of building out their product, trying to figure out how to sell to the industry, how to work with the industry, still figuring out the nuances of that particular problem that they're solving. So yeah, we invest in those companies globally. We have a team of 6, 5 in California and 1 in Europe. And yeah, I think the interesting thing about myself and the team is a lot of us actually come from the industry. So we have firsthand experience out in the field, and not just from an investing side. I think we all kind of have this passion for making the industry better, whether it is through technology or whether it's us working with industry groups or nonprofits. We all kind of have that inherent interest in moving the industry forward. So we end up working with a lot of the startups, and whether if we invest or not, we still love kind of giving our time to those entrepreneurs.
Yeah, and one of the things that we talk a lot about on the podcast is where the state of something is. What would you say right now if you're a new construction startup? What is the state of venture capital today versus what it was?
Yeah, so I would actually break that down into the state of venture capital for everything, and then there's also the state of venture capital for construction tech specifically. And for construction tech specifically, over the last, I would say, 3 to 4 years, we started seeing a lot of large companies set up venture capital groups. So they're kind of called corporate venture capital, so CVC. So I think this year there was Home Depot that set up a corporate venture capital group. There was also, Owens Corning has kind of been around, and they've kind of had a greater emphasis on the construction tech side for this year. I think UFP, another large materials company, set up a venture capital group. A couple of years back, we had DPRW Ventures. Suffolk has Suffolk Tech, and then we also have the likes of Consigli that has done some investing, Arco Murray. So we started seeing a lot of these companies from industry investing in startups, because a lot of these companies, they were working with these technology companies and they saw what they were doing and they were really excited about it. They also wanted to be a part of that journey, so they've done these investments. So I think that's really exciting. So the corporate venture side, there's more and more interest. We're also seeing more interest from large conglomerates and kind of large companies that have CVCs adjacent to construction that are now interested in coming into construction and investing in construction tech. We're also seeing a lot of generalist investors that are getting interested in the space as well. I think partly the pandemic and the Infrastructure Act, there's been a lot of stuff kind of in the news and around the need for increasing construction productivity. And I know that there's a lot of people listening that have probably seen that famous McKinsey study slide that shows construction as the second least digitized industry in the world. So there's been a lot of tailwinds that are kind of focusing on the construction industry and why we need technology for it. So I think it's a good time right now. There's money coming into the space. There's a lot of construction companies that are interested in adopting tech. I think we're kind of changing that mindset around technology too. So yeah, I would encourage, more people to come look at our industry, not just from within industry, but also entrepreneurs that can bring experience from, healthcare, aerospace, kind of other highly regulated industry to build tech for us.
If you're a new startup company, how would one reach out to help them jumpstart the idea of venture capital and kind of defining what that is?
Yeah, so it is really important to define what that is, because I think Silicon Valley and venture capital has been really glamorized in media, especially with, Katera, WeWork. There's a lot of like crazy, stories, even Theranos, right? There's a lot of like crazy documentaries, stories that have happened over the last, 5 years, that I think people just associate venture capital with startups in Silicon Valley. And what we like to say is that, there are a lot of different types of companies that people can start, and venture capital is only one way of kind of helping with, startup capital, right? So venture capital is one way. There's also, government grants. There's also other types of funding from, friends, family, wealthy individuals, that may or may not necessarily be structured as, in that venture capital journey. When you raise venture capital, you are giving away a portion of your company. And I think this is what some people don't really realize is like, at the early stage, like when we do do an investment in the seed round, you're giving away potentially 20 to 30% of your company for this capital. So it's not free. I think a lot of, there's been a lot of media that has maybe hinted at, oh, it's really easy to raise venture dollars. And I think that was probably the case in 2021. It's getting a little bit harder now. And yeah, for anyone looking to learn more about venture capital, I think there's a lot of great resources out there. YC is a really good, like they've, I guess, collated a lot of information around what is venture capital, what are some of the legal things that you should do. But that's very like generic. On the brick and mortar side, we actually have a pre-seed accelerator program called Formwork Labs, where we don't necessarily do the basics of how to start a company and stuff like that. But we do a lot of the basics around, what is the construction industry? How do you sell to the construction industry specifically? How do you think about go to market? Just because our industry is so nuanced compared to other industries that you almost need this like slant on how do you do this, but for construction. So the Formwork Labs program is a 12-week program where we bring in speakers that train the companies, the cohort. And those speakers all kind of come from either the construction industry or they're really experienced working at a construction technology startup. And a lot of those happen to be founders that come from the brick and mortar portfolio. So yeah, we have a kind of focused accelerator program. And yeah, anyone who's looking to start, definitely feel free to reach out to me. I know we don't have that much information on our website, but I'm more than happy to kind of chat through or provide, advice or guidance on how to raise money.
Yeah, and how would that pitch occur? Is it more like a Shark Tank pitch where everybody comes into a room where it's all glamorized and this is what my company is, this is how much revenue we've done, this is what I projected to our earnings, and then let's have a good conversation about how much royalties. Explain how that would work for the industry as a whole, maybe, and then go back to brick and mortar and how that pitch would occur.
Yeah, so that Shark Tank-like approach actually happens a lot for demo days. So the demo days are usually at the end of some type of program, whether it's an accelerator program or an incubator program or something like that. Venture capital firms also host demo days to kind of show off, their portfolio and the companies that they've invested in. So that tends to be like the format for, normal, I guess, investors, right? But I do love the Shark Tank like approach. For us, our process at Brick Mortar, it's usually just a introductory call at first. Just start learning about what is the company doing. We like to tell them about, Brick and Mortar. And we tend to have a bit of a longer process than some of the other VC firms out there, because for us, like one of the biggest factors for investment is how much value can we actually add to the company. So our thought process is, if we were to invest in a company, we don't only provide capital, we also want to change the trajectory of that company and make sure that, the value that we bring, whether it's, advice on go-to-market strategies or introductions to, a lot of the folks that we know in the industry, and helping them curate their message for, different types of customers. We have a big focus on that. So we actually like to work with the startup over a period of time, help make introductions, help, with brainstorming sessions and stuff like that. And also that helps us build a relationship. I think we've, Darren, our managing director, coming from the construction industry, I think like we have a pretty big emphasis on a relationship for our team. And I think we borrowed that from the construction industry, where relationships are so important. We want to make sure that, we are that partner, we're going to sit on the board, and that we are kind of with that entrepreneur for that entire journey. So we want to make sure we build a relationship with the founder. We want to make sure that we can prove our value to that founder. And when there's a time for, that raise and, kind of things are coming together, it should be a lot faster of a conversation for us on, whether or not we're going to do that investment, because we will have already done a lot of that diligence in that relationship building timeframe. And then we kind of discuss, the startup's KPIs, where they're at, revenues, how much they're raising, and what are their use of funds. And from there, we'll do a term sheet, we'll do an investment, and then keep working with them until their next raise, and hopefully we get to continue to put in more capital after that.
What are some of the, I guess, biggest challenges or shortcomings that companies that are just starting to get into the venture capital space, where they've got a product, they've got something that they think they can, make money out of? What are some of the things that you've seen that, okay, this one did really well because they went to market this way, and this one did not because they went too fast, maybe?
Yeah, so I think the really good ones have figured out how to create partnerships for distribution. So one of the, I guess, like, the thing with venture capital is, like, once you raise venture capital dollars, you're almost, I think we always say, like, the metaphor is, you're jumping on that treadmill and you're running really, really fast. So distribution and getting people to use your product is a really important part, at least in the early stage, to prove out traction that, like, hey, this is a big problem that we're solving, and there's a lot of people that, need this solution, right? So there's that aspect of it. So distribution is a big challenge, and we really make sure that, the startup, the entrepreneur, kind of thinks through all the different options, thinks about how to create a wedge, how to create partnerships, how to create, like, that network effects.
Kind of the why of why they're doing it. They need to really understand that deeply.
And then specifically for construction, we've got a lot of inefficiencies. I can think of 10 tiny little tools that would have helped my day-to-day life as a project engineer. So the other side of that is, like, construction has a lot of problems, but not all of them are going to become billion-dollar companies. So we also have to think about that, right? There are certain solutions where, like, your initial solution is a point solution, it's solving this very, like, niche problem, everyone loves it, and then that could be a wedge that you then expand into building out a lot more product and turn it into a quote-unquote platform. So there are those things to kind of think about, but then there are certain areas where you may only be building that one very niche solution, and you're not going to be able to grow beyond, doing just that, because there's, like, already an incumbent that's doing a lot more than that. So those opportunities would be more suited for, like, acquisition by one of those larger companies. And sometimes, that, like, that math just doesn't work out from an investment perspective, because when we look at investing in a company, ideally, it's one company that returns the entire fund, meaning if we make that investment, they are going to net us, like for our second fund is $130 million fund. You're kind of thinking about like, oh, can I invest in this company and can they return me $130 million of the fund? But at that stage, we may own like less than 5%. So if you do the math, it's like, oh, this company needs to be worth more than $2 billion or whatever. Right. So like
the evaluation has to be correct. This is much
exactly. Yeah. So we're always thinking about that in evaluation. It's like, is this one of those companies that, may end up getting bought by Autodesk or Procore? Or is this that company that really is able to turn into that, billion-dollar company or multi-billion-dollar company for a fund? And at the end of the day, like, we are focused on the construction industry and we want to move the industry forward, but we also have fiduciary responsibility to our investors to make them money. So I always say, like, when we think about companies, sometimes it's really hard for me because I may have my construction industry hat and I'm like, oh my God, the industry needs this. Like, this is very, very important that we, invest money into this. But then sometimes I have to take off that hat and put on I always call it the greedy VC hat. It's like, but then I have to think about like, how are we going to make a crap ton of money in 6 to 8 years? And then the like, you start thinking about like, okay, I know the industry needs to go this way, but is the industry going to adopt this in 6 to 8 years? Or is this like a 20 to 30 year kind of time frame from an industry adoption perspective? And, given that this podcast, BIM Heroes, like BIM has been around for a really, really long time. And like, I can't even say confidently that a lot of people in the industry are adopting it correctly. So, it's one of those things where it's like, would I have invested in, some company that was, I know Revit was like a fairly decent exit, but it wasn't like a great exit. But it's like, yeah, you look at that, it's like, do we think even in 10 years, all construction projects are going to implement BIM? I think we are closer to that now because, with computational design, there's a lot more compute power. Like I think we're getting closer and closer to that where we can have full BIM adoption, but it really took us like 40 years to get here, or like, potentially 40 years to get there.
Yeah, absolutely. And I think that's the challenge too, is taking something at scale. What and how are you trying to scale, and how far do you scale? Because I think one of the challenges in the construction industry that everybody wants is interoperability. Well, that's fine in the general scheme of trying to make the industry better, but that doesn't always mean that you're going to make your product better to make money out of it. So that's kind of the balance that I wanted to get into next. How do you balance that in this industry compared to some other industries that might not be?
Yeah. I don't know. I think that's a tough one because there's been a lot of groups looking at interoperability for a long time. I think like one of the most popular examples is probably IFC. And I think the intentions behind it were great, but you can ask anyone that when you're exporting from any system into IFC, there's data loss, right? And it's always that carrot of, no, but I want you to use my tool. So I'm going to have some proprietary format, or I'm going to have proprietary something. So it's really hard for us to get to a point where it's like truly, I don't know if I want to call it open source, but it's like truly a way where we can share data across platforms seamlessly. There are a couple of startups that are trying to build those like connectors, APIs. But I think at the end of the day, like a lot of our systems were built so long ago, like 20, 30 years ago. And there's so many on-prem solutions. Like there's so many like versions of the same thing within one organization that even at like a big company, you can't have data interoperability across your regions because you may be running off of like, 10 different versions of the same ERP system. So like a lot of that is like in the services side right now, building those one-off integrations. But I do think that, and I think this is one very big opportunity for AI in our industry, is really cleaning, sorting, filtering, organizing a lot of our really unstructured data so that we can leverage it. So that is like one interesting part, but then there's also like the flip side of, maybe we can, like, maybe we won't need a lot of that legacy data either. And then you can leverage AI systems to like really go pick and choose and find the important information. By the way, I think like, hopefully in the next couple of years, given the amount of investment going into AI, that could be like one benefit for our industry. I still don't know if it's going to be, a construction specific kind of company that's going to do that, or there may be, some generalist kind of AI startup that's going to really nail down, this is the most effective way to do it. And then we'll just have to bring that tech into our industry.
Yeah, and I think that's a great lead into this question to you. Analytics is a big part of any industry, but for some reason, construction has, and the whole industry, architecture, engineering, and construction, has not done a very good job capturing those that data for analytical review. I think that's going to be a huge explosion. That's just my opinion on that. I know, the company that I work for and other companies that I talk to, that's a major push, is to look at how projects are working as a whole, why they fail, why they succeed, and doing that analytically, whether it's AI or just data that's captured within a program that's putting that data to the source to you. Just wanted to talk to you a little bit about that and where that's all.
Yeah, for sure. And I think that's a great little plug for Evercam because, those are the companies that are going to be very important for industry because it's passive data collection. I think one of the biggest challenges for that, and it's like, why doesn't it exist, is like, for a long time, like we've had paper forms, and at the end of the day, like paper forms are easy, right? It's like you can't give everyone an iPad, or like, you're not going to expect a worker to take off their gloves to go, pull out their phone and then do like, it is like there's some friction to that. And I know there are some companies that are doing things like that and they are getting success with it. But I think for collecting data from the field, I guess like the field is harder problem to solve. Collecting data from the field has to be with passive data collection. And, the more, and I think this is like the push for sensors. And I know like IoT adoption hasn't been great in construction. I think it's more of a hardware and connectivity issue rather than like a we want it kind of issue. Because if we can have more sensors in the field, I think we can get a lot more passive data collection. And then, of course, with the use of AI, we can, filter, clean, recognize, understand what's going on a lot better. So, yeah, I think
That's always been a challenge, like you said. Whether it's procurement, whether it's people on site, whether it's materials movement. That's a huge area that has not been worked out yet.
Exactly.
But the sensors is a major point.
Yeah, the sensors, and yeah, I think like you mentioned like supply chain tracking, double handling of materials. And I think a lot of people in construction want that data, and they would be open to collecting it on behalf of, the company for the analytics. Like I don't think construction people don't want the analytics. I think it's just that when you're in the field, like something happens and it's a fire drill and you're like, oh crap, do I take, 5 seconds to, actually it'll be more than 5 seconds, a couple minutes to go like fill out this form, or do I like run over to the other side of the field where, they're pouring concrete over an embed that's like installed in the wrong place or something like that, right? So like
and put
the construction site
versus taking the picture of the fire as it's burning down.
Exactly. So I think those are the things that our industry, like it's a big challenge for our industry, which is why I'm all about like, can we get to a point where we could just do like full passive data collection?
Yeah, and I think the field is pushing for that. On the office side of things, I think one of the things that you're going to start to see is using the analytics for no-goes. I think that's one of the
Yep.
biggest challenges in the industry too, is whether it's architecture, engineering, or construction, they might have worked with a specific owner in the past, they might not have worked with them in the past. How do you go about, choosing this project is going to be successful? I think is a major point in analytics and where all this is going to in the office.
Yeah, we're starting to see a couple of companies that are trying to tackle that. And it's really like on the sales side, right? It's like trying to understand, like managing your CRM on the sales side, trying to understand not just the clients, but also, from an estimate perspective, can we speed up that estimating process? Can we do constructability better by, leveraging some of the AI to do quality control? So I think like that is all coming and it is very exciting. I think what we cannot lose sight of is that at the end of the day, the projects are still managed by humans. And I think there's still a lot of like interpersonal relationships. There's a lot of just like, I don't know, there's like a human factor to what makes projects successful that I don't even know if we have a research behind that, right? Like I've worked on two IPD-ish type projects, and I would say like one of them was really good, one of them was really bad, and a lot of it had to do with kind of the culture and the relationship of between like the owner architect and the contractor, and how does that kind of culture and personality flow down to everyone else that's working on the site. We've also seen like in the field side, certain crews are just kick-ass crews and they work to, like superstar teams, right? So there's like a lot of this that I don't even know if there's like enough research behind it to correlate, great teams and great performance. I know there's a lot of research around like high performing teams, and at Stanford Sci-Fi under Martin Fisher, there's a lot of research around that. But I like, we don't have enough data, right? So I think this is like the whole, we need the data, we need the analytics, and we still have to capture all this data on the human side to make those, like, to understand project success.
Yeah, absolutely. And I think that's one of the pieces that is going to always need the human interaction. We can take the AI and we can supplement some of those tedious tasks, but the industry as a whole, just like the medical field, just like teaching, in some respects, you've got to have that human interaction.
Yep.
We saw that with the pandemic. We saw that with a lot of different aspects of the industry as a whole, and I think that will lead to different things. But analytically, there's so much to dive into analytics. I think that as an industry, we could do a whole lot better job on the collection piece, and I hope that that continues in the future of the different companies that are trying to do that. But like you said, passive collection of all these different things is going to be key. Next topic I want to get into is just some investments that Brick and Mortar really got into, and kind of walking through, here's the pitch, here's active, and then how some of them exited. If we could get into a little bit about
that. Yeah, for sure. So on the active side, well, we have a portfolio of, I think we've made over 50 investments in the construction tech space. This includes our former lab startups. And there are a handful of them that have exited. So, Fieldwire, Level Set, Building Connected, PlanGrid was a little pre-existence of Brick and Mortar, but that was, one of Darren's investments in the seed round. So we've seen a number of exits there. On the active side, we have, companies that are kind of, all over the place, whether it's like peer software, tech-enabled services. We have robotics companies, hardware companies. So the ones on the exit, I think, trying to figure out which one is would be a good example to talk about. Maybe Fieldwire would be a good one.
Or Hollow Builder.
Or Hollow Builder, yeah, actually, Hollow Builder, very, very relevant. Our mutual friend. So let's talk about Hollow Builder. So the story is actually very interesting. Curtis Rogers, one of the partners here, when he was at, I think it was when he was at McCarthy, he spent a lot of time in the progress capture space. And he was trying to figure out, how do we document progress on site? How do we share that? And at the time, I think he was looking at something to do with the HoloLens. Like he was like exploring all the range of, technologies. But he knew that he knew that with the 360 cameras that had just come out, that someone needs to leverage 360 photos to go capture progress in the field. And I think the story is like Curtis found the founder Mo and a group of folks at HoloBuilder. I don't even know if they were called HoloBuilder at the time, but he found a group on this, like, I think it was like a Rico 360 forum or something like that. And they were trying to do something around 360 photos and VR. I think you're going to have to interview Mo or someone from HoloBuilder to get the accurate story, but this is kind of like from, hearing. So Curtis actually sought them out and, was really excited about what they're doing and worked with them really closely on like products, getting them on construction sites. Cause this was a team that didn't have any construction experience, but they had deep technical expertise that had to do with, 360 photos and understanding, XYZ space and, doing measurements and all that type of stuff. So Curtis ended up working really closely with the team on sitting down with them on a weekly basis to go through their product strategy, what they should build. This is what the customers would want. And they got to a point where Brick Mortar did an investment in HoloBuilder. They also raised money from a large German bank, relocated to the US and kind of, was off to the races in selling their product, working with the industry. And yeah, got to a point in the life of the company where there was an opportunity for an exit. And I think the really interesting thing is it just made a lot of sense for Faro because, you've worked, I think a lot of people listening to this podcast has worked with Faro laser scanners, right? That's one type of reality capture. And how much more data and how much more analytics could you run on that if you had both 360 and point cloud data? And I think a lot of it was bridging that gap, or this is my assumption, is that, you want that data in one place. And also there aren't going to be as regular laser scans that you could do as you could do with 360 photos. So I think it's an interesting way to get almost a fuller like reality capture of what's out in the field. So yeah, it was a definitely a fun journey. It was a little hard just because like at that early stage when HoloBuilder was founded, we didn't have that big of an interest in construction tech yet. But as they were continuing to grow, I think like we were starting to see more kind of action in that space. And of course, yeah, the big fan of the HoloBuilder team. I ended up like meeting a lot of them and they've all kind of gone off and they're all doing a lot of really great things.
Yeah, another one that always interests me too, that I noticed was Building Connected. They kind of have a different strategy in terms of they're really focused on the bidding aspect of construction. Talk a little bit about that particular exit and I guess, they went to Autodesk.
Yeah. So that one is I think that one's actually a really interesting contrast to HoloBuilder because HoloBuilder was a team that came from outside of construction, right? So Building Connected was, of course, Dustin DeVan. I forget which company he was working for at the time, but he was working for a general contractor. And he saw this pain point of like, oh my God, it's so annoying to manage, the bid process with all the emails, vendors, and all that. And he like left his job and went on to build Building Connected. And yeah, that was also one that kind of happened pre Brick and Mortar, and that was a Darren and Curtis kind of investment. And the interesting thing with Building Connected is their focus was not necessarily on monetizing at the beginning, because it is really hard. If you're a startup, how can you expect people to pay for a tool that may or not be as, complete, or like what a company would expect, right? I think there are certain solutions that need to have a lot more product before someone would pay for it. So with building connected, I think like also with what they were building, it's a collaboration tool, right? So there's a lot of network effects that go into that. So for the first beginning chunk of their life, they were really focused on user growth. And really, like, one of the only ways to do that is kind of by raising venture capital, because I mean, unless if you're a wealthy person yourself and you can kind of go front the capital to basically go work on a product, build a community without any revenues to like pay your staff, pay your software engineers and all that. So the early days, they were really focused on user growth, just because like, and I think this is the right approach. It's like the more people that you have on it, the more valuable that community and that network is. So very similar to like, Instagram, Facebook, and all of that. So yeah, they went out and got signed on, all of the largest GCs, and got to a point where they were, starting to turn on revenue numbers and starting to get customers to pay for it. And I think Autodesk didn't have, something like that in their portfolio. And this is a little bit of like, we never know exactly the reasons, but I think it was a really good opportunity for Autodesk to start having relationships with trade contractors, because, at the time, Autodesk really had a lot of tools mostly focused on the GCs. So that's kind of my like guess on, where they were going with that strategy.
I
think it was like,
I also think too was a push to try to compete against Brick Mortar, because they felt like that was I guess the growing concern was that it was only for architects and engineers and designers versus construction.
Yeah, that also as well. Yeah, they were building out more of their portfolio to focus on the construction side of things. Yes, and that exit happened at the same time as PlanGrid, or around the same time. I think it was like within months of each other. And as we all know now, PlanGrid has kind of become ACC, or the backbone of ACC, and the new kind of construction focused, project management focused tool. So yeah, we know a little bit of history now, and now we can kind of fill in the dots.
Switching gears to some active investments. I'm focused on one of these that I think is going to change the trade subcontractors a lot, which is what you just brought up, is kind of like rugged robotics. So what they're doing with layout, I think there's a couple others that are trying to compete against them, but I think this is going to be a really interesting conversation here in the next few years.
Yeah, this is it's funny because, and I know I'm not supposed to pick favorites, but this is definitely one of my favorites. And I often joke, it's like my first favorite robotics company after the Litter Robot. So the Litter Robot, I have a cat and I'm obsessed with the Litter Robot. But love the Rugged Robotics team. We've known them for, I think I actually met Derek the first week that I joined Brick and Mortar. And I think I also had a little bit of, I don't know if I would call it like insider information, but like, because I had worked at DPR, I know DPR had built their own laybot, and they had, the IP behind that. And I had worked closely enough with the drywall team to see the value of that. But it's like, you see that, and then it's like, oh, but you can actually print whatever you want. Like, you can print equipment anchors, you can print fences, you can print, fancy flooring that would have been really, really hard to like draw out, really nice curves, terrazzo flooring curves by hand, right? So just the idea of, being really, really being able to like print whatever you want on site, I think that's definitely going to speed up it's not just speeding up the process for layout, but it's also, a huge kind of quality control thing, right? And one of the angles that I took on it was, there's a lot of, and tying this back to BIM, is there are a lot of models out there that never gets into the field. And I think that's one of like, for me, it's one of the most frustrating things, because like I have seen so many companies spend a crap ton of time building this like fully coordinated model just so that when you get in the field, you're either not prefabricating or you're still installing stuff at the wrong place because that information hasn't been like distilled down into a fashion that makes it into the field. And I think one of the like, rugged robotics really helps close the loop on that BIM side, right? So helping get BIM into the field. And for them, they're really replacing the total station, which I don't know if a lot of people have realized. They're replacing the total station, and for their product, they actually don't need they actually don't need total station. Sorry, I meant they're replacing the robotic total station as a whole, and they don't need that. Like they've figured out their own like positioning system to know position, where they're at.
Gotcha.
Yeah.
No, that's a huge thing. I mean, I think robotics as a whole, if it's not just for layout, but other types of tedious tasks. Another great one is masons having to pick up CMU block, and that is a laborious task. But going through the process of where robotics might change the industry, I think there's going to be a huge impact over the next 10 years on that front. And I think that companies like Rugged Robotics and themselves are going to lead that way, because I think layout has always been a big challenge. And if you can lay out something, let's say with one person with the robot overnight, then the crew comes back in the day and continues work. That's a huge impact on production and efficiency.
Yeah, my good friend who currently is at DPR did a study on that. He actually shared with me that they ran a simulation on, hey, if we actually did layout at night or on the weekends, you would be able to pull out a ton of room in your schedule. And then of course, if you bring it one step further and you do multi-trade layout, that could save a lot of people's time, and you'd have basically all your blueprints on the floor. So I think there's a lot of interesting stuff you could do with that. I've tried to pitch a couple of people like, hey, would you actually lay out piece by piece to kind of control what's being built? So like one of my ideas is, could you actually take, your 1 week look ahead, right? So I know, a lot of companies do this where like on Monday mornings, you would basically look at the plan for all of the trades in a specific area. So, could you take a layout robot and have it lay out the scope of work for each individual trade in their areas that they're working on just for that week? Mm-hmm. So you can see, for this week, I expect you to do this much production. And then on Friday, you can very easily go walk the field and check like, oh, I see this is printed. Did the contractors meet what they expected? So I feel like it could also become part of like a lean tool. And like, I don't know, I think there's a lot more that you could do with it if we think a little bit outside of the box. It's like if we had this layout robot on site all the time, could we leverage it to help people visualize better or even do quality control on like, did that get installed in the right place? And use it to drive the schedule.
Yeah, and use it for almost progress review to see.
Yes, exactly.
And some companies are doing that with pictures. Some people are doing that, like you said, with robotics. I think that's another big large piece of the industry that is lost. As you mentioned with the BIM model is trying to get that information in the field and then ultimately install it the way that we plan it. Because the industry is a huge planning industry. And every program and every software that comes out, that's the whole purpose, is to have better planning so that you activate that into the field. My question then leads into this. Are you seeing a lot more on the hardware side of things or more software as a service type venture? Different programs, different companies that are developing?
Yeah, if I look at hardware, I would say it's trending more and more. On the software side, we're definitely seeing trending more and more at a faster pace. And I think a lot of that just has to do with software is a lot easier to build.
Cost of entry.
Yeah,
like a cost of entry type deal.
Yeah, but also at the same time, like I think what we will have to be wary about is because software is getting so much easier to build, that like moat is really hard, and you have a lot more competition. So I think this is interesting, is like, as we're evaluating software companies, there's always like a fairly large competitive landscape. And even with, AI doing a lot of the, just like, so there's been a lot of AI that's been built by software engineers to make their workflows more efficient, and they're kind of working themselves out of job. Like, I'm not saying we're not going to have any more software engineers, but like, software companies are being easier and easier to set up and to scale. Um, so there's not really a moat for that. But for hardware companies, because hardware is hard and you're doing physical things, there is IP around what you're building. I would say there's more IP around what you're building. And it's harder for, a competitor to spin up. If you're 1 year into the journey, it is harder for a competitor to kind of spin up and like be able to compete with you, just because that in that 1 year's progress, it does create such a moat for those hardware companies. So I think for me, like, and I don't know about you, have you felt like you are now inundated with so many software companies that you almost like have solution abundance and it's like harder to pick now?
It is. Yeah. I mean, we talk about this every day, right? There's 3,000 different software companies. It feels like that pops up every single year now that does one small thing of the industry, versus trying to look at the grand scheme of something, and it might do a slew of different things.
Yeah.
I'm with you. I think there's a lot more softwares than ours. And you were inundated with so many of them. How do we even start the process of trying to review them, not even implement them, just
Yeah.
reviewing them to get to the bottom line of which one we're doing? And I think it comes down to this, is that it has to fit a workflow need. And if it
Yep.
doesn't, then it can be a really cool technology that we can look at and we can put to the side and say, look, this is going to probably do something, but we're not there yet. We need this, and this solved to help our business be successful.
Yeah. Yeah. I 100% agree. And I think with like, it's interesting because when we did the investment in Rugged, we went out to some construction sites and checked out, a couple of different deployments. And when you see the robot on site, like, people get really excited. Like, there are other tradespeople, like, it's not even their crew that's doing the printing, it's other tradespeople or other people walking around site. Like, they come by and they're like checking out the robot and they're like, oh my God, like, that's so cool, that's awesome. And I feel like you don't get the same feeling with software anymore. Like, I think like 10 years ago, it's like, oh my God, I have this like great app that does XYZ, right? I feel like we've also become so like our expectations for software is like so much higher now
Yes.
that it's like people don't really get as excited, right? It's like you need to be like truly game changing in some way to like get someone excited about software. But on the hardware side, it's like, you know, one robot on site gets a lot of people talking about it. And I haven't seen that like same level of excitement around technology in a while, right? So
And I think
I'm
it
like,
goes back to what you said. It's that personal investment that the company has made, not just in the building of that robot or that piece of hardware, but coming out to the job and actually showing what it is supposed to do. And I don't
yeah,
think that
yeah,
software companies do enough of that. I think they just
no,
do a Zoom meeting and say, this is what it's going to do. Let's pilot this for a couple of weeks. We're not really going to tell you how it works. You're just going to get in there and you're going to start using it. And I think that's
yeah,
the biggest challenge. You can't do that with hardware, or the piece of hardware
yeah,
just sits on the floor and it doesn't do anything. So,
yeah, yeah,
and
I agree. And with the software side, I think like you hit on a really good point where, there isn't enough of that interaction with your customer. So any company that's building tech for the field, you have to be out on site. You need to understand those workflows. And that's why in our investing criteria, we actually see if the founders of that software company has ever been on a construction site, because we know that if you are the type of founder that's like not getting dirty on the site and really understanding your customers well, that product is not going to be successful.
it's a big red flag, I would say, for state,
Yeah.
venture capital. It's like, if you're not in the industry, whether you brought somebody on or you're going out with that person into the field and actually seeing your product work, how do you as an investor have any, that's how investment of anything works. If I go to buy something and the person that's selling to me doesn't really fully understand what they're solving, that's a huge red flag to me. I know it is for investors.
Yeah, for sure. Yeah.
Um, Talking about that McKinsey study. So McKinsey obviously does a lot of research. And we'll get to that study here in a minute. Do a lot of venture capitalists like Brick and Mortar, do you do your own study, or do you rely on a lot of the large ecosystem type studies that are put out like McKinsey?
No, we definitely do our own study. I think with some of the like more generic research groups out there, I don't think they just get as nuanced as we do. I mean, like, we're from industry, we've been in the field. We also look at this, we only look at this industry, not just this industry, but like we're very focused on this industry. So from a day-to-day perspective, we have a lot more data on just the startups, what they're doing, what the customers need. And yeah, we do our own studies, we do our own competitive landscape. We do a lot of our own diligence. Like we don't use the expert networks to like go figure out, tell me something about this part of the industry. We have a lot of personal connections with folks in the industry that will give us unfiltered feedback on whether they think a solution is dumb or not. So yeah, we still look at the McKinsey stuff and it's funny because one of our teammates, Costa, he used to work at McKinsey leading a lot of that research for construction, and he's still really close with the group that does that. And I think with the McKinsey studies, they do a really great job at that, really high level trend stuff. And it is really important because it helps get people who don't know about construction excited about construction. So we do need McKinsey to like do that stuff for like for the industry.
And then let you guys dig deeper into those different constellations and those different points.
Yeah. But given Costa's relationship, we still collaborate with a lot of the consulting groups. We collaborate with a lot of the industry groups for helping share some of those data or share kind of what we've been seeing, like kind of a little bit more of a boots on the ground feel.
Yeah, and I think that's what that study really shows, is really those connections between the different things and highlighting at a high level. Here's where we think the industry is and where it is going. Talking about that with brick and mortar and the active investments, or maybe, future investment, where do you see the biggest push in, let's say, investment in a particular area of construction?
Yeah, so I think for the next couple of years, it'll probably be AI, just because it's a little bit of a trend, I would say. This year, since last year, there's been a lot of investment in generative AI. I think a lot of people listening
on the design side of things, of generative design.
Well, I don't know if that's necessary. Yes, we are seeing a lot of that right now. Whether we need a lot of startups doing that same thing, I don't think so. I think we've definitely seen a lot. I would say, yes, we're interested in AI, but I think what the kind of holy grail would be is an AI that understands 2D plans. We have not seen that yet, or at least not to the extent. We are seeing a couple of startups that are on that journey, and there are some that are really promising. But a lot of the AI that we've seen that are kind of in that 2D plan space has more been like recognizing symbols and stuff like that. So like more simple AI.
Would that be for more like estimating type purposes?
I mean, there's a lot of opportunities there, right? It's like estimating, constructability review. I mean, just think about it. Like, you probably spent a lot of time looking at 2D plans and not just know what the hell you're building, but also to like figure out how things connect. There's just so much information in 2D plans, and all of it is like super unstructured.
Yep.
And I think a lot of, there is a trend in the industry of trying to generate as much of that 2D information from Revit. But at the end of the day, like a lot of it is still coming from CAD.
Yes.
And we know that that is not smart. It's not like you can't connect it,
Right, because it's
like
lines versus objects and different aspects.
Yeah, there are a lot of
This doesn't
challenges
work.
with that. Yeah. So I think that might be like personally one of the things that I'm looking for is that. But of course, some of the things that we've already talked about with the robotics and even the sensors, right, for progress capture, I think we still need that tech.
Yes.
And we are now looking at a lot of adjacent industries to try to find. And we build relationships with people in real estate, or sorry, not real estate, aerospace. We build relationships with defense, just because there's so many more R&D dollars that are going into some of those industries, that we're like trying to follow what's going on in those research labs to see if there is a technology that we can actually spin out and bring into the construction industry. And we've done that in the past with investments. It's like, hey, you're not building tech specifically for construction, but we will help you get customers, and we want you to come into our industry because our industry needs this.
Exactly. You see that cross industry type connection there, and a lot of technology was developed out of those different over the past 100 years of just the U.S. alone. Just talking about that aspect of the 2D, one of the things I think that would be really interesting too is code checking within AI, because it's not just like the constructability, is it there, but like going through the details and going through the model to make sure that the things that we're working through meet the code. And that's internationally, that's nationally, locally at a state level or at the city level. I think that would be a huge benefit, not just on the front end to help designers make sure that the structure that they're designing is within code, but also on the back end to make sure that the subs are in place through it.
Yep. Yeah. Yeah, because we've seen that on the 3D side. That's kind of been around for a little while, right? It's so much easier to do code compliance when you have, 3D objects and you could easily do measurements. But yeah, on the 2D side, it is a harder problem to solve because you have to figure out scale. You have to piece together multiple plans and details. So I know the team behind Toggle is working on something in that code compliance side. So yeah, I think, that is in the next couple of years, I think it'll be really exciting to follow that.
And then do you think that also on the 3D side of that discussion, that in the US, one of the biggest challenges that we've always faced is trying to estimate projects, but to do it in a way that we see the differences in the changes that occur within the design of a project. I think that's always one of the biggest challenges is, okay, we do this, we're at this budget, next time it comes back out, it's like we start all over again, and we got to figure out what changed between there and you see any investment into that aspect.
Yeah, so I think there's two. So there's the 2D side and then there's the 3D side, right? So the 2D side, we are seeing a couple of companies that are trying to track changes over 2D plans, but not just, overlays, right? They're actually trying to understand the drawings to know, did you just move this text box from here to here and you're flagging it as a change, or did you actually change the underlying kind of context of that text box, right? So we're seeing some of those. And then on the 3D side, we invested in Hypar. And the idea behind Hypar is if you have, a lot of your functions, equations, your equipment, all of that stuff is built into Hypar, you can very easily, move things around. And because all the calculations are there, you can recalculate and basically regenerate your building pretty quickly. So Hypar is in the mission of auto-generating buildings. It's a tall order, but I think, I'm very excited about that because in the whole world of BIM, a lot of people have tried to do that, cost estimating from BIM, but you still have to manually move a lot of stuff around. You still have to manually change material. There's still a lot of like manual stuff around that, even if the calculations are automated. So I think with Hypar, if you build in all those calculations, swapping out equipment is like one really interesting example where I know for the data center space, lead times for transformers and generators and a lot of big equipment for the data center space, that lead time could be more than a year now for some of that equipment. So in that decision-making process, it's like if I need to get a data center online within a year and my preferred equipment, the lead time just like won't allow me to finish on time, can I swap that out to a different piece of equipment? And then can Hypar help me regenerate, all of the routing, redo all the calcs because, they know the constraints of the building. Can they regenerate that automatically and give me an updated bill of materials, right? So I think like there's going to be so much opportunity in that like early stage decision making if you are able to basically codify a lot of those calculations on something like Hypar. I mean, I'm obviously biased. I want it all on Hypar so that we can, get to a point in the world where you tell the computer, these are my parameters, these are my constraints, generate that building.
Give me an idea of what I'm looking at, and then I'll take
exactly. Or give me a couple of options, right? And these are the 3 different price ranges or whatever it is. And then because with Hypar, their objects are to the manufacturing level, could I then click a button and buy all of that material, right? And then could you write in all the functions to export that out into shop drawing? There's just so much that you could do now if you build all of that into one platform that, isn't constrained to Revit or isn't constrained to, the model authoring tools that we have today. So I'm excited about that one.
Yeah, and I think that's where differences of contracts around the world, like IPD that you brought up, that's going to drive that forward, because what you're talking about is what the industry has always strived to become. This dynamic that plays out between the design industry, the owner, and the contractor and the subs has always been static. They've always been in their own worlds. They have different contracts, and one of the things that I think will help that is technology that helps jumpstart that whole process as a team versus just one software that's just focused on the design aspect. And that will drive the whole conversation forward on that. One of the next pieces of this conversation goes back to one of the earlier things you talked about in venture capital, which is the ability to look at these different buckets and trying to figure out, okay, if this does this and this does that, how do I know when looking at a pitch that we're going to pursue that?
Yeah, so I guess our main criteria is what is the problem that's sort of solving and how big is that problem? I think that's the main thing. And within our industry, there's still so many opportunities. Like I wouldn't say, like communications has been solved, right? I think there's still a lot of challenges with, field to office communications. There's also like planning and scheduling. I think we have a lot of scheduling tools out there, but the adoption of that, I think, has still been, pretty bad. And then of course we talked about, analytics, visualization, like there's all these different little buckets. And when it comes down to evaluation, it's like, are we hearing that this is a like top of mind for the industry? And if it is top of mind, is this only general contractors? Is this also trade contractors? Are the owners going to have a piece of this? So you kind of start doing this exercise of like, does this problem span across the entire supply chain? Or if it's a problem that's like maybe only for general contractors, but within the general contractor kind of customer base, it's like such a big problem that you need like everyone within, that project team to help with, or like to use that solution, right? So yeah, I think our like main criteria is probably like, how big is this problem? How annoying is it? And that industry's appetite.
And that's one of the big things that I'm trying to do with this podcast is trying to get out there to different points that are not as seen as some and try to dig into what they're trying to do to solve those different problems. My final question to you is what is the future of venture capital in this space and as a whole?
Yeah, so I of course, I would like to see a lot more venture capital dollars coming into the construction tech ecosystem. But I would say a lot more on the later stage side. So over the last couple of years, we've seen, a pretty good amount of funding at the earliest stages. So in terms of like Builtworld focus funds, that number kind of shot up in the last like 2 years, right? So now there's a lot more VCs that are focused on, prop tech, construction tech, like Builtworld tech kind of thing. And I think that's great, right? Because like we're only one fund, we can't fund everything. And I think it's good to have competition in terms of, what startups are doing too. So we've done, or the industry has done a really good job at like, convincing outsiders that, hey, you need to put money to work in this space. I think where we're getting to is a lot of those companies that have received funding, they're all starting to become more mature and they're starting to hit Series B, Series C, and later. And we don't nearly have enough venture capital firms that are looking at, later stage construction tech deals over there with the understanding of the industry. So I think, our like construction tech VC ecosystem as investors, like we always try to educate other investors about why our industry is important and why they need to invest in the space. We will continue to do that. And I think we do need to see more kind of a push from that perspective. For venture capital in general, I don't know. There's been some speculation that, with what happened in 2021, a lot of companies got overvalued. Now, a lot of those companies are trying to figure out what they're doing because they can't raise more capital. There are venture capital firms that took a big hit from placing some bets that didn't do well. And there is some speculation that there may need to be like a culling of VC firms that kind of, just deployed capital into some of the wrong companies. But of course, that's speculation. So I can't say for a fact. But there are also VC funds are still kind of popping up. Like people are still able to raise money. So as an asset class, I think the asset class will remain. But yeah, I don't know if it'll be like bigger or smaller.
Yeah, I think that that's part of business in general. There's always going to be really good decisions. There's always going to be really, bad decisions, and you kind of ride those waves. And I think one of the things that investment in the space shouldn't be scared off by, let's say, a failure in another space or even a failure in the space, because every company is different. Every company leadership and the group behind that is different. The strategy of how they go about it, but guiding these startup companies is a major deal, especially a lot of them that I always, when you watch, shows like Shark Tank, you can tell some of the people that have done the work to bring on business-minded people versus people that are really good at building. And those two different personalities don't typically get put into one person. You've got to bring some people together to try to do that business-minded entrepreneurship. And I think that that's one of the biggest things that I see when I look at these different stages, whether it's in the AEC industry or if it's in the general public of venture capital, is this idea that, you got to know what you're good at and where your weaknesses are. You need to push somebody into that to help you push that weakness out. And then you'll have a very successful company.
Yeah.
Any final thoughts from you on that?
No, I 100% agree. Like we've seen like all different types of founding teams. And of course, I think that balanced approach, like you always need, someone who has a grasp on building product. You need someone who, can help with fundraising, someone who's a storyteller, someone who can, get people excited about what they're building. I think like that is, I didn't know that that was such a big part of venture capital, but over the years have learned how important it is to kind of be like a company evangelist, whether it's like to recruit people to join your company or to, sell it to investors and to sell it to your customers. So yeah, there's always that like interesting like founder like group dynamic that we also look at when we do those investments.
Well, Alice, I wanted to thank you for joining me on the BIM Heroes podcast. And hope you have a great day and keep doing what you're doing.
Thanks, Cody. This was a lot of fun.
Thank you.